Bring it back.
What's up, YouTubers? Alright, so today I'm going to help everyone out. I'm going to do them all justice. Everybody's been hitting me up. Yo, can you help me? I need help. I don't even understand what's going on when I'm looking at these charts. So the most important thing you need to understand when you're looking at charts is what kind of chart you're looking at. And the most common one that everyone tends to use are candlesticks, candle charts. There's multiple different charts. There's line, there's bar, there's area. There's so many different kinds. But the main one you need to know is candles. So today I'm going to break down the story of price. That's how I look at it. And I'm going to get in depth on candles and how to read them and what they mean. So let's get to it. Alright guys, so let's get to it. Alright, so I downloaded this little Easy Draw app, so bear with me. It's my first time ever using it or even looking at anything like this. So let me pull something up really quick for you guys. Alright, and I believe you can do color here. Sorry guys, it's taking a minute. It's my first time using this thing. Alright, there you go. Cool. So we got that now. Alright, let me pull some things out. Let me see how to write some text in here for you. Alright, so bear with me. I'm going to explain everything I'm drawing out to you guys in a moment. I just want to have it like a nice visual for you guys because a lot of people like visuals. Cool. Alright, so this right here is a bullish candle. When I say bulls, that means price is going in an upward direction. So if you hear someone say, today is looking very bullish, or price action seems to be bullish, that means price action is in an upward movement, or there's a lot of buying pressure, because when you buy, price goes up. So that's why I have bulls up here to break it down for you guys. But now let's get into the candle. Down here at the bottom is the open. So here, this will make it easy for you guys. Let's write $1. So price opened at $1. All right? And price raised all the way up to, let's give this, I don't know, $5. And this is the close. So this candle closed on the high of $5. So it opened at $1, price moved its way up to $5, and it closed. That's it. Now it would go on to the next candle. But let me finish up here before we even look at the next candle and how it works. So starts at $1, opens at $1, and closes at $5. When you look at a chart, you will see hundreds and hundreds of these, and it's basically showing you the history of price, where price is and where it went, basically the whole lifespan of a candle. So Let me write something here. 1 hour. Let's say this is a 1 hour. We're looking at a 1 hour chart now. Let's say we're looking at a 1 hour chart. So for this candle to open at $1 and close at $5, it took 1 hour. Let's think of it as a seed. When you plant a seed, it takes time. When a candle opens, it takes time to close. So this candle opened at $1, closed at $5. This took 1 hour. Now, if you open up a chart and you look at some of the candles, you'll see they have lines like that coming out from either direction, any size, any length, doesn't really matter. But what these mean is where price used to be. It's basically history. It's a footprint of price. It shows what price did within the hour. Sometimes you won't even have wicks, and a lot of the time when a candle doesn't have a wick on the close, it's normally a stronger candle, meaning there's either a lot of buying or selling pressure because they were able to maintain their high or low. So from here to here, the whole candle, that's called the body. Then on each end you got wicks. They're called wicks. Upper wick, lower wick, low, and a high, because this candle is going in an upward momentum. So high, close, open, low. Now when you're watching a candle, it doesn't always create a low or a high first. They're moving all over the place. So it could create a low first and then go over to this area and then make a high and then get pushed down and finally close out. But let's say the sellers push price down to here, right? So candle opened here, raised all the way up to, let's say, right here. Let's give this, I don't know, 7. Let's call this a 7. This is, at this height, it is $7. Over here is 5. Over here is 1. And let's give this one 50 cents. Oop. Alright, so 50 cents. So open, close, high, low. The reason why this happens is because there's selling momentum, or there's pending sells, basically people having like an order here that's saying when price gets to here I want to sell. So it'll tend to push the candle away from its high. So the candle wasn't able to maintain this high because the sellers pushed price down to 5. But look down here. Price used to be 50 cents. So actually sellers used to be in control of this candle at one time. The best way to look at this is a tug-of-war match. So the candle's here. This is where it opens. This is, everybody's on equal ends and they're ready to tug this rope. So let's call these people on the top side of this line up here, these people, let's call them the green people. And on the bottom part of this line, let's call them the red people. Now, they both start tugging. When you're watching this candle, they'll both start moving. It'll move in either direction. So let's say the red people give it a tug and they pull it down to 50 cents. But then the green people give it a harder tug and pull it up to 7. Then the red people pulled it back down, but they weren't able to pull it any lower than $5 because the green people were just too strong and they were able to close price out at $5. So that's basically how you would read a candle. Like the simplest way I can put it, the easiest I feel. Let's go on to the next candle. What happens after this hour is up? Let's say this is a 1 o'clock candle. right here is a 1 o'clock candle. 1 o'clock. Bear with me, it's kind of hard to draw on this this touchpad I got going on over here. So 1 o'clock, this candle finished at $5. The next candle that opens up will open on the close, because this is where it finished. It started here, but it finished right here. So it picks up where it left off at $5. So this candle picked up at 5. And they come in all shapes and sizes depending on what happened during that hour. And any chart you're looking at, depending on the time frame, it will be in correlation to the candles, basically saying that each candle represents the amount of time you're looking at. So if it's a daily chart, each candle will resemble one whole day. You're looking at a 1 minute chart, each candle resembles 1 minute. And so forth. 4 hour, each candle's 4 hours, and so forth. I mean, that's pretty basic stuff right there. That's easy for everybody to kind of grasp. So every candle has a lifespan of the chart you're looking at. 1 hour chart, lifespan of a candle, 1 hour. So 1 o'clock, 2 o'clock, 3 o'clock, 4. All right, so now we're looking at the 2 o'clock candle. This one is the 2 o'clock. All right, so we got a 2 o'clock. Man, this is so sloppy. It's all good though. You guys are still gonna learn it regardless, sloppy or not. Oh, let me give this thing some color. Let's give it. Whoa. There you go. All right. And the reason why I picked green and red is because the generic charts normally come in green and red, but you could change it to any color you'd like. Now, this candle, let me get some text going. This candle was owned by the bears. This candle was owned by the bulls. It's green and it went up, closed higher than it opened. This candle was owned by the bears. Bears are normally red, but like I said, you could change it to any color. They could be purple. Doesn't matter. Alright, so basically for a bearish candle, meaning price is going down, sellers, bulls equal buyers, bears equal sellers. Got it? Alright, so if this one is for buyers, which means price wants to go up, then this one's got to be for sellers, meaning price wants to go down. So it's basically the same as this, just in reverse. Instead of the close being up here, the close would be down here. Let me get some text for you guys. Oh, snap. Alright, cool. Close. And then this would be the open, the opposite of the other of bullish candle. So let's see. Price opened up here at $5, correct? The previous candle finished at 5. This one opened at 5. Let's say this is about, this was the low of 50 cents. So price opened at $5 and dropped all the way down to 50 cents. Open, close. Now with these candles, it's the same concept. The wicks resemble basically a footprint of price. Let's give it some wicks. Some wickage going. Alright, so let's give this the high of $6. And let's give this a low of 20 cents. Doesn't really matter. All right, so this candle opened at 5. Remember, this is a tug of war match. So this candle opened at 5. Bulls tugged it up. So this candle actually used to be green up here. Every time it crosses over the opening price, say if it was to cross up here, it would be green. When it crosses below the opening price, it's red. Same thing for this candle. Opens down here, so it used to be red when it was over here, until bulls tugged back and launched it up there. Same concept, guys. So open, bulls tugged this rope. The rope went up to $6 and the candle was looking green. This looked like a bullish candle at some point in its lifespan. Then the bears tugged. They tugged really hard and they pulled price all the way down to 20 cents. That's a big drop from a high of 6 down to a low of 20 cents. Then the bulls gave another tug, their last attempt, and they were only able to bring it up to 50 cents. And it closed at 50 cents. It is now 2 o'clock and the candle's done. There's many different names to candles and candle formations. The best way to read these candles is in sequence with other candles, so you could get a better understanding of price. I look at these things as words, like I'm able to read them like a word, like I could see what price is doing and I understand it. Now when you have them together, it's like a sentence. They all flow together, and it's just one giant sentence, and you're able to just flow through the charts and just read it. Just like you would with words. You just are able to know exactly what's going on and what has happened. So let me give you a formation or just a sequence of candles so you could see it as a sentence. Delete all this. Alright, so I left the 1 hour up because let's say we're still looking at a 1 hour chart. Let me draw some candles for you guys. One here. So let's give these candles some color. Red, red, red. No, this one needs to stay red. red. There you go. This one, let's do this one green. I'm getting the hang of this. Look at that. I learned so quick. Alright, cool. So let's throw some wicks on these things just to confuse you guys. Nah, you guys got it. There's gonna be no confusion after this video. You guys are gonna be pros at reading candles. It's really easy, guys. Oh, actually, let me make this one red. Or orange. No, it's gotta be red. Alright, now let me explain this to you. So let's say price opened over here, because remember this is a bullish candle. You can see it's red. It's in a downward movement. It opened over here, closed over here. Let's say it opened at let's give it a 10. It opened at $10 over here. So price opened at 10, it created a high. Let's say this is 11. Created the high of 11. $11 up here. So this candle opened at 10, got tugged by the bulls. The candle was green at one point. Up to $11, bears gave it another tug and pulled price all the way down. Let's say this is, I don't know, $8. So this is $8 now. They closed it on $8. Bulls are no longer in control whatsoever. Bears won this tug of war match. Next candle. Opened at 8. Tugged all the way down to, let's give it a 6. Bulls gave it a tug up to 7. Let's give it a 7 over here. And it closed at $7. Next candle opened at $7. Got tugged by bulls up to here, back into the 6 area. And then the bears gave a strong tug and pulled this candle all the way down here. Closed it out. Let's give this a 4. So this is a 4 over here. Next candle opened up at $4, and there was a strong tug. You can see this candle used to be a big red nice candle, looking like price wanted to keep dropping. But then over time the bulls gave it a strong enough tug to take bears completely out of control and close above the open. If price close above the open, it's a bullish candle. It's green or whatever color you have your candle set to. But if you pull up a random chart, like 90% of the time it's going to be green for bulls and red for bears. All right. So next candle opened on the close of this candle, and it closed below the open, meaning it's a bearish candle. It's red. But it used to be even a bigger red candle when it was all the way down here. You could see this. It was almost next to this low over here. Let's give this low over here. Let's say it got down to 10 cents. Let's say 10 cents. And guys, this is just random prices I'm just throwing out just to give an example. So 10 cents. This candle used to be at about 11 cents down here. You see that? If I drew a line over here, it's a little bit above this low of this candle right here. So it did have a low of 9 cents, which is, of like 11 cents. But bulls gave a tug, pushed the candle back up, and they closed out. Done. This candle's done. On to the next. Open, close above the open. It's a bullish candle and has an upper wick. It used to be a little bit more taller, but the bears gave a little tug and dropped it just a little bit, nothing significant. Next candle. Opened on the close, created a low. It used to be red. Bulls gave it a tug and pulled price up. It's a bullish candle. Now this candle right here. This candle has many names. Pin bar. The most common is doji. This is a doji. Let me write it up for you guys. Doji. This candle's a doji. It basically means that price is undecided. Nobody won this tug of war match. It's a tie. No one has power. So this candle opened and closed right where it started. Let's say this is $7. It opened at 7 and closed at 7. No one took control here. You could see it did once used to be a big green candle, and it used to be a red candle, but no one could maintain their strength, and it was a draw, an indecision candle. So these are called dojis, and there's so many names to these guys. Like this one over here is a pin bar. I normally trade a lot of these actually. This one's like a bullish engulfing candle. There's a lot of names to these things. And like I said, there's multiple different kinds of charts. So not every chart you see is going to be a candle chart. There's going to be line charts and other kind of charts out there. And they all resemble price in a different way. Like a line chart is all closing prices. So you don't see much history of price. It's just the final answer. It's just the closes. So let's say we're looking at a line chart right here, right? Let me give an example. Bear with me. This is not going to be perfect, guys. So a line chart just does closes. It's going to be something like this. Here, little pull up, down, up, and stayed right over here. Without that squiggly, obviously, it would just stop right around here. And depending on the next candle, it could curve, it can continue to go up. But that's basically a line chart. That's how a line chart is formed. So that's basically it, guys. If you have any questions on these, you could always email me. I put my email at the end of the video. Oh, actually, one more thing. I forgot to mention, like I said, it's a 1 hour chart. So every candle is 1 hour. So let's say 1 o'clock, 2 o'clock, 3 o'clock, 4, 5 o'clock, 6 o'clock, 7 o'clock, and so forth. So yeah, that's really all. And I'm pretty sure you guys could have a good understanding now of candlesticks, how to read them, and how to read them in sequence, like a big sentence of price. So, like I said, if you have any questions, just email me at Piponomics. I'll write it up on the end of the video. So, all right, guys, safe trading. Take care.
Yeah.